Hey guys, what's up? Something I talk about once in a while and maybe don't elaborate on enough is the idea of catching the falling knife. And you'll hear people on the internet talking about investing, and they'll say things like, never catch a falling knife, let it hit the floor first and then pick it up. And there's a conceit in there, the idea that you know when it hit the floor. And the thing is, when you have an asset that's falling in price, you don't know when it's done falling in price. You never know. And so the idea that you can simply wait until you know that it's done falling in price and then you can buy it at the low is ridiculous. What the best investors do, the most successful in the long run, is they understand that when the knife is falling, you reach out with both hands and you catch it on the way down. You buy consistently over and over again. And then at some point, without you knowing, that asset will have hit the low and it will start coming back up. But for a little while, right after it does that, it looks like just another bump. Like maybe it's like this and it's going to fall down again. Except with hindsight, later in the future, you can look back and you can see, oh, yeah, that was the final trough. And that's why this idea that you can just wait till it's safe to pick it up is ridiculous. And so I talk about this a lot in relation to things like, say, Dominaria Remastered. It's had quite the fall and now it's beginning to recover. And I bought several times through the downside and a little bit so far again on the upside. And do I regret buying past the bottom? No. Because as I've been doing that, I didn't know if maybe Watsy has a whole nother warehouse full of it that they're going to dump at some point. And so when you get enough experience in investing, it no longer bothers you to do this. It no longer bothers you to buy an asset and then see the price go down again the next day. And I'm going to talk about two examples right now that I think are very illustrative to companies in the stock market. And so the first is Boeing. We all know it's been going on with Boeing for, golly, well, for 20 years, but more recently for the last, say, 4 or 5 years with the 737 MAX. A couple of them crashed, killed like 400 people. Turned out it was a whole lot of cost cutting and penny pinching and everything at the company was responsible for it. They thought they could outsource some of the software development to third world countries for $7 an hour and that would be a good way to develop software for an aircraft. It turned out that really didn't work so well and a couple hundred people died. And the stock suffered. And then more recently, they had the Alaska Airlines door plug blowout. And then they've had a couple other minor things that were probably not really their fault, but they happened to occur on Boeing aircraft. And so they get a lot of airtime on the news. But, Boeing is a company in trouble, but it's really only a company in medium term trouble. Because let's be realistic here, they build spacecraft for the US government. They build missiles for the US government. They build attack helicopters. They build military aircraft. They build training simulators. They have many other lines of businesses. I think they build satellites also, in addition to just generic like launch vehicle spacecraft. So they have a fully fleshed out suite of defense industry kind of products that they offer that the US government buys, that in a lot of cases the US government is locked into buying because they have huge fleets of them. Things like F-18s, F-15s, and Apaches and Chinooks. Okay, Boeing builds all of those. Or McDonnell Douglas originally built them and now Boeing builds them after they merged back in the late 90s or early 2000s. And so basically, Boeing, sadly, it's too big to fail. Okay. Boeing will not fail. Now, could Boeing get split up? Could the government step in at some point and pressure Boeing to spin off, say, military aircraft division and space division with the satellites and the missile division, and maybe some of the other big defense contractors would gobble up bits and pieces of them? Maybe, but it's pretty unlikely. Since the end of the Cold War and the huge kind of consolidation of the defense industry, the government's kind of felt like that's gone too far, and that there are not enough big defense players. There's 5 or maybe 6 or 8, depending on what you define as big in the U.S. So Boeing probably is not going to get split up because there's antitrust concerns. and they are not going to fail because they are too big to fail. Whether you like the idea of too big to fail or not, it doesn't matter. The reality is it's too big to fail. So, what is going to happen to Boeing stock? Well, in the short term, there's still a lot of risk. There may be some big other problems with Boeing's company policies and with their actual implementation of those policies. Maybe a lot more information comes out in, say, the 0 to 9 month time frame. And maybe the NTSB investigations into the Alaska Airlines door plug blowout, maybe that turns up a whole lot of terrible dirt on Boeing and the stock price falls more. It's fallen from what, like 360 or something back in like 2019, and then it's like what, 160 today. Very, very ballpark figures. And so, in the short to medium term, yeah, there's downside risk. What's the long term risk to Boeing? I think it's almost none. Again, they're too big to fail and they're unlikely to get broken up because of antitrust concerns. And so, if you were to start reaching out and catching that falling knife of Boeing stock right now, and you had a plan that you would buy, say, I don't know, let's just make up some numbers, $500 of stock on the first day, the first trading day of every month. Well, probably in 5 years, your total position will be positive. Now, will it beat the rest of the market? Will it beat an S&P 500 index ETF? I don't know. But reaching out and catching that knife while Boeing is probably going to keep coming down for the medium term and may fall precipitously in the medium term, or may arrest that descent and by 6 months from now be trending back up towards $200 to $250 a share, that can be a very good investment. Those kind of things, identifying those situations where companies probably aren't going bankrupt, they aren't going to go away. And so in the long term, the downside risk is just that you miss the opportunity of having invested in something else that would, in hindsight from the future, have turned out to have had better returns. And so the second company I'll talk about is Disney. And Disney has had a lot of problems. They had a lot of big box office bombs in 2023. It looks like their 2024 box office lineup is pretty bad also. Wolverine Deadpool movie is probably going to do all right, but it doesn't look like they have anything else really that's going to be great. Bob Iger has said that they're going to cut back on the amount of movies and television shows they produce. Disney Plus is a giant lodestone around their neck. They have lost tens of billions of dollars on Disney Plus, on the acquisition of Fox and all the other properties they bought. Maybe it wasn't Fox. Who was it? It doesn't matter. But Hulu. And so even the park attendance is down. So Disney is in a really bad situation right now. Now the question to ask, again, is Disney going away? No. Is Disney going to go bankrupt? While I would say that the chance of Disney going bankrupt is a little higher than the chance of Boeing going bankrupt, I still generally think no. And so if you imagine 5-10 years in the future from now, then yeah, Disney stock will probably be doing pretty good by then. Whatever needs to be done to right the ship, in 5 to 10 years, they probably will have done it, and the stock will have recovered. Might the stock go lower between now and the next, say, 3 years? Yeah, it probably will. But you don't know that, and you don't know where it'll hit the bottom. And that's why if you were interested in having a position in Disney stock and you thought that it was going to eventually stage a dramatic comeback and far outperform the rest of the market, then reaching out with both hands and starting to catch that falling knife is the smartest way to do it. And so keep that in mind. There are a lot of these kind of sayings that people use in the stock market when they're talking on internet forums, and it's mostly just parroted nonsense, and they typically don't think about it themselves. And never catch a falling knife is one of the worst ones because it's the ultimate kind of short-term Timmy mindset. It's the idea that if you buy something and tomorrow it's worth less than what you paid for it today, then you're an idiot. And that's not realistic. There have been many, many times in the last 20 years of me investing in the stock market and more recently in the TCG world, where I've bought something and the next week it's worth less than I paid for it. But then you wait 2 months, 6 months, a year, maybe a little longer, and most assets increase in value over time. And that's how you build long term wealth. It's not panicking and selling your entire position of a Fortune 500 blue chip company because it went down by 3% today. It's buying great assets at a good price and holding them for the long term. And part of buying them at a great price is that you catch the falling knife. So think for yourself, make the good investments when you see them. Don't be so afraid of buying assets that you think will go down more in the future. Ask yourself on the long timeline, 5 to 10 years, do I think this asset will become worthless? And most of the time, when you're honest with yourself, the answer will be no. Thanks to everyone who makes this content possible, especially my very generous supporters on Patreon. Like, comment, share, and subscribe, and join me on Final Trade.